All right, diving in today, folks, and we are looking at Tesla.
Oh, Tesla.
Yeah, Tesla. You know, one of those companies that's kind of always in the news
Oh,
cycle.
wait, something happening over there.
Right. You sent this article, I think it was from yesterday, Wednesday, March 19th,
Yep.
from TSLA Investors.
Right.
And it's talking about, well, a pretty dramatic drop in Tesla's stock value.
Yeah, I mean, it's.
So we're going to take a deep dive today.
Absolutely.
And try to understand what's really going on.
Yeah, beyond just the headlines, right? Like, what are the forces at play here? What's really driving this downturn?
Yeah, I mean, because the numbers, they definitely catch your eye, right?
Absolutely.
The article says Tesla closed at $225.31 on Tuesday, March 18th.
Uh-huh.
That's a 5.33% drop.
In one day, yeah.
In one day.
Pretty wild.
And this is, get this, the 9th straight week of losses.
9th week.
9 weeks in a row.
It's not good.
Yeah. And we're talking a 53% drop from that peak in mid-December.
Yeah, I mean, that's a pretty sizable correction.
It feels like things might be changing, so let's try to unpack all of this, right? What does the article point to as the main reasons for all this selling?
Well, there are a bunch of things happening all at once, right? But the article really highlights how competition in the EV market, it's really heating up.
Oh, yeah.
Which, I mean, we all knew that was coming, right?
Yeah.
But they focus on one thing in particular that seems to have spooked investors.
Yeah, I think we're talking about what's happening over in China, right?
Exactly.
With BYD and their charging technology.
Yeah, their new charging tech. It's crazy.
I mean, adding that much range in just minutes.
I know, right? They're claiming they can give you 400 kilometers.
400?
Which is almost 250 miles?
Yeah.
In just 5 minutes.
5 minutes.
It's unbelievable.
So this is a pretty direct challenge to Tesla.
Oh, totally. Remember how for years Tesla's supercharger network was like their secret weapon?
Yeah, a major advantage.
A huge moat.
Yeah.
But if companies like BYD can offer similar or even faster charging, then that advantage kind of disappears.
Yeah, the playing field is leveled.
Totally. And this goes beyond just speed, right? It's about changing how people think about EVs.
Yeah, if range anxiety isn't a big deal anymore.
Exactly. Then maybe Tesla's charging network isn't as special as it used to be.
So what was once a big selling point
Right.
suddenly doesn't mean as much.
Yep. And investors are picking up on that.
Okay, that makes sense. But it's not just competition, right?
Right. We're also seeing what analysts are saying about Tesla, and it's not looking great.
Oh, the downgrades.
Yeah, the downgrades. The article mentions Tom Narayan from RBC Capital Markets.
Yeah, he slashed his price target, right?
Big time. From $440 down to $320.
Wow.
And his reasoning goes back to what we were just talking about, right?
Yeah.
More competition in China. Especially, plus, he's not as optimistic about Tesla's self-driving technology and how much money it'll bring in.
So it's not just about what's happening now, but also how much they can make in the future.
Precisely.
Yeah.
Investors were betting on big things from full self-driving.
Yeah, makes sense.
And Narayan's basically saying, maybe not so much.
Okay, and he's not alone.
Right. No, not at all.
Yeah.
The article talks about other Wall Street firms doing the same thing.
Downgrading.
Yeah, like JP Morgan.
Oh, yeah.
They cut their price target by a whopping 41%, down to just $135 a share.
Wow, that's a massive cut.
Right. And when you see multiple analysts, especially big names like these, getting more pessimistic,
Yeah.
it can trigger a real sell-off.
Oh, like a snowball effect?
Exactly. People start thinking, uh-oh, maybe I should get out while I can.
Okay, so tougher competition, analysts getting nervous.
Right.
What about actual sales numbers? How are Tesla's cars actually doing in the market?
Yeah, the article dives into that, and it's not painting a pretty picture. Sales are down in a lot of key markets.
Like where?
We talked about BYD making waves in China.
Yeah.
Well, Tesla's February shipments there were down 49% compared to last year.
49%.
49. That's their lowest volume since August 22.
It's huge.
It's not just a small dip.
No, that's a big red flag.
Especially for investors who are used to seeing Tesla grow like crazy.
Great, right.
And it's not just China. European sales in January were also down 45% year over year.
Wow, so it's a broader trend.
Yeah, and here's the kicker. The overall EV market in Europe actually grew by 37% during that same time.
So the market's expanding,
Yeah.
but Tesla's losing ground.
Exactly. They're not just selling fewer cars, their market share is shrinking.
That's not good.
It's definitely not what you want to see from a supposed market leader.
Okay, so China, Europe, what about Germany specifically?
Oh, Germany's even worse. February sales there plummeted 76%.
76%.
Yep.
That's a disaster.
Yep. It is.
All right.
And it really drives home the point that competition is getting fierce.
Right, right.
And maybe consumers are shifting to other brands.
Okay, competition, analysts downgrading, sales taking a hit.
Yeah, not great.
But the article also talks about Tesla's valuation.
Right.
Like, even with the stock down so much, it's still considered expensive by some measures, right?
That's the key point.
Yeah.
Even after this drop, there's a lot of debate about whether Tesla is still overvalued.
Right.
The article says their forward price to earnings ratio is 65.
65.
Which is like 3 times higher than the average for the S&P 500.
Wow. Okay. For those of us who don't live and breathe stock market stuff,
Sure.
Can you explain that a little?
Yeah. So the price to earnings ratio, or PE ratio, it's basically how much investors are willing to pay for each dollar of a company's future earnings.
Okay.
So a higher PE usually means investors think the company's going to grow a lot in the future.
They're expecting big things.
Right. So even after this big drop, investors are still paying a huge premium for Tesla.
Compared to other companies.
Exactly.
So they're still expecting massive growth.
That's the bet they're making.
But with everything we've talked about,
Yes.
slowing growth, more competition,
Why?
it's harder to justify that high price, right?
Exactly. People are starting to wonder, can Tesla really deliver the kind of growth that justifies such a high PE?
Maybe the market's getting a little more realistic.
It looks that way. Those sky-high expectations might be coming back down to earth.
Okay, I'm starting to get the picture. The article also dives into the technical side of things.
The charts.
Yeah, charts and all that.
Yeah.
What's the main takeaway from that analysis?
Basically, it's not good news for Tesla bulls.
Oh, no.
They say Tesla's broken below this key support level.
Support level.
Yeah, it's like a floor that the stock price has bounced off of in the past.
Okay.
And that level was $258.99.
Mm-hmm.
This level has held for 2 years, and now it's gone.
Broken through.
Yep. And to technical analysts, that's a big sell signal.
Meaning what?
It means they think the stock's going to keep dropping.
Oh, fun.
Yeah, not so fun if you own Tesla shares. They're predicting it could go as low as $154.50
Wow.
to $161.50 in the next few weeks.
That's a big drop from where it is now.
It is. Of course, this is just based on chart patterns.
Right.
It doesn't necessarily mean Tesla's doomed,
Okay.
but it does show that the momentum is definitely to the downside right now.
So what would it take to turn things around?
Well, the article says Tesla needs to get back above that $258.99 level.
$258.99.
Yeah, if they can close above that, it might signal a change in momentum.
Like a sign of life.
Exactly. But until then, the technicals are pointing south.
Okay, so that's a key level to watch.
Big time.
Now, the article also mentions some other price levels that investors should be aware of, right? Like support and resistance levels.
Right.
Can you walk us through those?
Sure. So on the downside, the first support level is around $190.
Well,
And that's based on some previous price peaks from last year.
okay.
So that's a spot where some buyers might step in,
And maybe stop the bleeding.
potentially. But if it breaks below 190, the next support level is all the way down at 140,
140.
which was the low back in April 24.
So those are potential floors.
Right. Places where the stock might find some temporary support.
Okay, what about on the upside? If things start looking up, where might the stock run into trouble?
Well, the first resistance level is around $265.
265.
Yeah, that lines up with some previous peaks from last summer and fall.
Okay.
So that might be a tough level to break through.
Got it.
And above that, there's another resistance level all the way up at 360.
360. Okay. So let's recap for our listeners.
Right.
Tesla's definitely facing some serious headwinds right now. We've got competition heating up,
Yeah, BYD is coming on strong,
especially with their fast-charging tech.
which is a big threat to one of Tesla's key advantages.
And analysts are getting less optimistic about Tesla's future.
Right, they're cutting their price targets and lowering their growth forecasts.
And we're seeing that reflected in real-world sales figures.
Yeah, down in China, Europe, and a big drop in Germany.
And even with the stock down significantly, there are still concerns about whether it's truly valued appropriately.
That high PE is making some investors nervous.
Plus, the technical analysis.
Not painting a pretty picture.
No, we've got a sell signal.
based on a long-term trend break.
And the potential for further declines.
Down to that 154.50 to 161.50 range.
With support at 190 and 140.
And resistance at 265 and 360.
Okay, so a lot going on here.
Definitely a dynamic situation.
So I'm curious, with all these challenges,
Yeah.
what do you think are the biggest factors that will determine whether Tesla can turn things around?
That's a tough question.
Because it feels like the landscape has shifted.
Absolutely.
Like the competition's really stepped up their game.
They have.
So what does Tesla need to do?
Well, I think it comes down to a few key things. First, they have to keep innovating.
Yeah, stay ahead of the curve.
Exactly. Not just with charging, but also with batteries,
Yes.
software, the whole package.
Right, especially that self-driving stuff.
Exactly. That's a big one. Second, they need to respond to the competition.
Strategically.
Yeah, maybe adjust their prices, come out with new models that appeal to specific markets like China.
Okay, that makes sense.
And finally, I think investors are going to be watching their sales and profit margins very closely.
Yeah, looking for proof that they can still grow
And grow profitably.
in this new, more competitive environment.
Exactly. It's a real test for Tesla.
It is. And it's fascinating to see how quickly things can change.
I know, right?
Like Tesla was the undisputed leader for so long.
Uh-huh.
And now,
Now the game's changed.
yeah, it really shows how important it is to adapt,
And keep pushing the boundaries.
especially in tech.
Absolutely. You snooze, you lose, right?
Yeah, you got to keep moving.
Yeah, the EV market is not slowing down.
No, it's just getting more interesting.
That's for sure.
All right, well, that's a deep dive into Tesla's current situation.
Yeah. Hopefully that gives our listeners some food for thought.
Definitely. A lot to think about.
Absolutely.
Until next time.